What's going on, everybody? It's Jeff here. Welcome back to the channel. Less than 24 hours before the market opens on Monday, AMC had a nice after hour push in volume minutes before the close. In this video, I want to talk about a few things. We're going to take a look at the charts, just take a look at some of the technicals as we are breaking some levels. I also want to give everybody just a quick rundown on how splits and dividends technically are normally run and how they look from a technical standpoint. It'll give you guys a good understanding. Obviously, it is pure, speculation. Speaking of speculation, there's been so many subjective comments and tweets about this, new ape dividend throughout the entire weekend. I want to just talk about two specific things and how it can relate, and also not get too far ahead of ourselves. While it is very beneficial to be looking 10, 15, 20 steps down the road, sometimes we can get a little bit too carried away. And if you remember last year, we were talking about things and putting a lot of time, energy, effort into these that never came to fruition. So it's always good to just take a little step back and keep things right at face value. I'm going to cover that in this video. Let's get right into it. All right, so let's take a look at this article. I had referenced this in my last video talking about Adam Aron's interview with Jim Cramer. And a lot of people are worried about what happens if Adam Aron drops an offering on Ape. First thing I do want to say, and I am kind of trying to position myself in how I would be, reacting as Adam Aron, and clearly I am not, but I'm trying to do and thinking of two main things. One, I definitely don't want to be backed up in a corner. I mentioned that in my last video. I want to have the ability to be able to raise capital if needed. However, I'm not just going to try to raise capital if I don't really need to. And there's a couple things that you want to think about. So first of all, AMC is still in debt, and an offering that would be dropped on Ape because AMC is going to be run together off of sentiment, and Ape is going to be backed still from a psychological and a fair value point through AMC as a company, because there is no company called Ape out there to be able to give it its valuation. That if an offering was dropped, chances are you will see a bit of a pullback. We watched this happen on June 3rd when we opened up that morning somewhere around the $70 price point. They did an offering. We dipped all the way down to 37, but as soon as that offering was closed, we ripped all the way back up to 67, and we closed somewhere around 50, higher 50s that day. So it can be very, very short term when offerings are made. Now, what can be beneficial if an offering is dropped? So you think about the debt that AMC has, and the biggest thing that prevents and hurts some of their bottom line, their profitability, especially in the past, has been the amount of interest being paid on that debt. So when Adam Aron talks about strengthening the company, is that good for us retail who is holding AMC specifically for a large squeeze? Well, in the short term, no. And it's because it can potentially suppress the price moving forward. However, in the long term, absolutely. And you have to take a step back and look at what happened with Tesla. Okay, Tesla was a heavily shorted company, basically trading off a valuation that was just completely unheard of. And as Elon Musk continued to grow Tesla and prove, to these shorts that, listen, this company is going to stick around. Okay, they are going to continue to grow. There is, a huge future in not only electronic vehicles, but is with movie theaters, and just the fact that they don't have this massive debt burden. The shorts are going to be thinking to themselves, listen, my edge, the edge that we had, is not the same edge. And you got to think about that from their perspective. Go back to the beginning of the pandemic. Now you are shorting a company who has massive debt, who's been struggling already, and is going to be switching to $0 in revenue because of the lockdowns. That is a massive edge as a short, all right? And as the company has changed and grown a little bit, they've still had a pretty good size edge. Even though retail did smack them around a few times back in May and June of last year, they still at least have a bit of an edge. Are they losing their edge slowly, quarter by quarter? Absolutely. So you have to think, if it's in the short term, if there is an offering on Ape, all right, if Adam Aron does choose to be able to raise capital and pay down that debt, does it hurt in the very short term? Absolutely. Will it fuel a little bit of, edge to the shorts in the short term? Absolutely. But as they continue to pay down that debt, grow the company, even the potential to be able to do stock buybacks. All right, you look at how the stock market has been running. That's something that we haven't even talked about, which is a whole nother topic. You look at some of these big companies that are doing very well. You look at Apple that has massive cash on hand. Amazon has massive cash on hand. A lot of times they will do stock buybacks, especially when the stock dips down. Well, you got to look at that. What happens if, AMC now at 516 million float goes down to 466 million? They take, 50 million shares off the table for the opportunity to be able to buy it at a lower price and sell it again in the future. That could be massive for us. That's something I don't even want to get into. That's so far down the road. Obviously, your mind can go there. I just talked about the 10, 15, 20 steps, and it's okay. But just think about where we are exactly today. So let's talk about where AMC stands from a breakout level. As you can see here, I'm looking at the 200-day moving average. We've had some trouble going all the way back to November. We tested it, had a little bit of a false breakout in December, pulled back. You can see here when we ripped up that $34, got into a pretty bloody halt, and it came and got rejected. Here we closed over as of today. Now, generally speaking, okay, when you're going through some of this, is obviously very unique when it comes to the APE preferred dividend. But if you look at how a stock split is, which is the closest thing that we can refer to, a lot of times it's a lead into earnings because there is expectations of that, a little bit of a sell the news event, which clearly on Friday we did not get. But there is a run up going into that release date. So we're looking at anywhere between the 15th and the 22nd. Could be a little bit of leeway. Obviously, I'm giving 7 days in there, but the 15th to the 22nd, generally there's a little bit of a run up, then a sell the news event going forward. So just keep that in mind. But from a technical standpoint, we've been below 20 for quite some time. And clearly once we broke above it, we smashed above it. That halt just, crushed all the momentum. You could see the volume that was massive leading up to it, and it just slowly continued to decline. But we break above that. We have the volume leading into it. We're above the 200-day moving average. And I do believe that we will go and try to retest that. All right. And this is, standard technical analysis. Anytime we break through a resistance, we're going to want that old resistance to act as new support. But clearly you can see, look what happened last time at that $20 level. We came up, we broke through it, a little bit of a pullback, we curled around, we maintained, and then we got that other rip. So look for a similar play out to happen going forward. Now, the reason why I'm saying this has nothing to do if you're planning on just continue to hold shares. I'm not going to be selling at $34. I held all the way up to 72. It's been quite some time. I've been able to grow my portfolio in so many other different ways. So therefore, it doesn't really matter if you are playing options and you are very inexperienced with this. I highly suggest you not. Market makers can, they track exactly what the retail sentiment is, and they will just completely shred against you in order to cause max pain, which is where we get some of that terminology from. However, if you do have some experience, take a look at this chart, watch how it played out before. Patterns tend to repeat themselves. This is the closest thing we have going through it. Now, if we do hold above this 200-day moving average, that gives momentum back to the bulls. You can see here this 50 moving average is quite a ways down, sitting all the way at $14. Now we do have the golden cross that can play or can be put into play going forward. However, as you can see, because there is quite a bit of a range, it's probably going to be a month or two out. Okay, so just keep that in mind. A couple things to just bring this video back from the beginning is, one, let's not get too far ahead of ourselves because we don't know what's going to happen. We're going to continue to cover the steps that are ahead of us. Let's let this dividend roll out. All right. Don't go chasing into this. If you have, if you're looking to add to your position, don't be adding on these massive rips. If you don't get to get a full position, that's okay. That's a part of investing and trading inside the stock market. Know how some of these splits, or in our situation, a preferred equity dividend, tend to play out. And then also take a look at this chart. Go look at, and you can go look at smaller time frames, the 15-minute, the 1 hour, the 30-minute, and see exactly how it played out before this, because that's the closest reference that we have to as of right now. So that is it for this video, guys. I'll continue to cover, all right, the steps 4, 5, 6, and all the way down the road as we continue to meet those. But before, just trying to get away from this completely subjective, almost argumentative speculation that there's no benefit to it. So that's it for this video. I'll see you in the next one.